I did a presentation at Keller Williams at the office a couple of years ago when I was working for the Royal Bank. So basically, my licensing is in insurance, personal insurance, so life insurance, disability, critical illness. I do health plans. I do a little bit of everything. But as it relates to you guys in your industry, a lot of life insurance. So Kelly had suggested that I come back and do a little refresher, just to give you kind of a little bit of education on life insurance and where it fits in our lives and where it might fit in your clients' lives. And I'm not asking you to sell your clients. I'm not asking for anything like that. I just want to provide you with the information so that moving forward, if anyone ever asks a question, you can give them, you know, a little bit of, you know, semi-educated advice. Realtors are trusted. I know, you know, I bought my house from my realtor. I love my realtor. She's also my friend. But oftentimes, if it has to do with my home or my life, I tend to, you know, throw things out her way sometimes. And sometimes you might get a client that says, you know what, I'm buying a house. I got a great mortgage broker. Do you guys refer business to mortgage brokers, or do they usually come to you after they have a broker or a bank? They come to you before process or after, or is it both?
Usually it's about 50-50 probably.
About
Some
50/50.
people get pre-approved and figure it out first, but a
Yeah.
lot don't. And then
Right.
the agents will refer to a mortgage broker.
Right. And has anybody ever asked you your advice on whether or not to get life insurance on a mortgage?
Rarely.
Rarely. Okay. Yes, Peng, somebody has. Do I do it? Do I not? You never get that either? No? Okay. Well, sometimes I'm finding with the people that I'm working with that they are getting that question. And sometimes they're coming back to me and saying, what do I do? And I say, well, don't ever tell them not to do it. Just tell them that, you know somebody that might be able to give them a little bit more detailed and tailored advice. So what I'm going to do is I'm just going to start the presentation, and it's just to learn a little bit about life insurance. So I'm going to figure out how to do this. I'm going to share my screen, and I'm going to pick my PowerPoint up, and hopefully it'll work. Okay, and tell me if you can see it.
No.
No, it says that you're sharing a screen, but we can only see black. Oh, there it is. We got it now.
You got it?
Yeah.
Okay. So that's me, Clarissa Ricks. I'm licensed insurance advisor, and I'm an individual insurance broker. So when I first came to you guys, I was with RBC, and I was there for a few years. And then I left RBC, and I still, again, stayed in insurance. And I went and I managed a brokerage for a year. So I got more experience, more skilled in the back end side of things. I did that for a year, and I realized that I missed being in front of people. I missed building solutions, establishing relationships, and building my book of business and my career for the long haul. So I went out on my own, and I started brokering, and there are some huge advantages to that. And again, I love what I do. So this is me. This is what I do. What I do in my role is very similar to you in your roles, is that I'm very client focused. So I'm building solutions. I'm getting to know the client, getting to know exactly what their kind of goals and objectives are, what they find important, what's of value to them. And then I'm making sure that their insurance or their protection plan matches up to what their life goals are. You guys in your role, you're finding out what the clients are looking for, what kind of home is going to suit their lifestyle, what community. So you're doing the same thing, you're building solutions. So we operate very similarly. My expertise is in insurance, and yours is in, building future plans and homes for people. I'm experienced. I've got 5 years in the business now. I'm continuing to educate myself on a regular basis through all my providers. I'm available. So as a broker, I'm not working banker's hours. So if you need me after hours, I'm always available. So I'm sure you guys are used to getting the 9 o'clock at night text messages and early morning calls, everything else. So I operate the same way. And the advantages of brokering is that I don't have to deal with just one specific bank. I have many to choose from. So I have 5 that I operate with on a regular basis. And the value in that is there's something for everybody. So sometimes people think that they can't be insured because they have a history of cancer, or they've got diabetes, or they use a CPAP machine, or whatever. They have underlying health issues and they just figure I can't get insurance, but that's not true. So I have multiple carriers that I'm able to work with.
Clarissa,
Clarissa, yeah.
I got turned down a number of years ago, but they never told me why. They just said, "Oh, Sarah, we can't insure you."
Yeah. So years ago, the person that you applied for with your insurance, were you working with an individual? Did you have an advisor, Michael?
Yes. Yeah.
Yes. So different advisors operate differently. So my motto is I'm not just selling, I'm educating. So if we're coming across a situation where you get turned down, I go to the underwriter and I find out why.
Yeah.
So that I don't know why your advisor wouldn't have done that, because it doesn't do anybody any good to just say no. So sometimes it might be you were turned down because of a pre-existing health condition, or it might be because you had a test that was pending. So for example, if you saw your doctor and your doctor said, your cholesterol levels are a little off, let's schedule a follow-up in 6 months. You're not dying, you're not sick, but there's a pending test.
Yes.
Oftentimes, insurance companies will turn you down because of that. And they're not necessarily turning you down, they're just delaying. So they're saying, you know what, Michael, we don't want to take on your risk right now. We want to wait and see what happens after that test. So one thing when dealing and working with me, it doesn't make sense to hold back information. It makes more sense to tell you exactly what's going on. So you should have been told exactly why. So insurance companies are happy to divulge that information. Sometimes it's just a matter of asking. So you might have applied and then they sent you a letter saying you were declined. Is that what happened?
Yeah.
Yeah. So you can follow up on that, but that's not your job. Your advisor should have done that for you. So I
Which you
apologize that you had that experience, but that's not an experience that you'll get with me. Okay.
Okay. Thank you.
With regards to life insurance, what's your guys' kind of knowledge base on life insurance? Why do we get life insurance?
For the people we leave behind.
Exactly. So I had an old man I worked for at RBC. He still messages me all the time and says, "You ready to come back yet?" But he always said that life insurance is a selfless insurance. It's something that we don't see the benefit of. So close our eyes, we're gone to the world, but we can rest easy knowing that all the loose ends are tied up, that nobody's left holding the bag. So the reason I came into life insurance is my dad was, he was a make money, spend money, make money, spend money, make money, spend money kind of guy. Wasn't a planner. It was always like, yeah, you know what, I'm going to take a month off and then I'm going to work for a week and then I can take another week off. Like, he operated that way. He wasn't anticipating getting sick, and he got cancer and he died within 3 months. And when he got sick, he was at the dip in his spending habits. So he was in Vancouver and I was here, and it was hard. Not only was it hard because my dad was dying and it was a short prognosis, but it was hard because financially I had a 6-month-old and I had to pay out of pocket, fly back and forth. At the end of the day, it cost over 10 grand, and my dad spent the last 3 months of his life feeling guilty and bad. And I don't want anybody to have to experience that. So putting a little bit of money and having a little bit of plan means that at the end of the day, everything's okay. We know that, at the end of the day, the only trauma that our family needs to experience is the fact that they have to mourn our loss. If we can put a plan in place, then we know that, our final expenses are paid for. And I just actually had a meeting with Dartmouth Memorial Gardens. And I've been quoting people, $7,500, 10 grand is the average cost. No, that's just to take care of your reins. Then there's another 10 grand that goes with a plot and like burying you. So it's about $20,000 right now to die. So, even if you're just putting a small plan in place to cover those expenses, that is important. The other types of insurance, you know, the other placement for insurance, that's a permanent need because that never goes away. We're going to die one day. So we need to have permanent insurance. The other one is a term need. So these are needs for insurance that do go away. So our mortgages, for example, they're 25 years or 20 years. We put a term in place because it costs less money for a term. And then we know that that large bulk of debt is covered for that period of time. And when that mortgage ends, then that insurance ends. We no longer have to pay for it. So there's two types of insurance. There's permanent insurance, where there's needs that never go away, which would be final expenses, which be, you know, if you have multiple properties, would be your estate taxes, those types of things. So that's more planning involved with that. So permanent insurance, and then there's term insurance, which is those temporary needs, like when our kids are young, for example. We know that they cost a lot of money. So we've got, you know, our fun things that we do with them, like hockey and sports. We've got maybe education savings that we're working on. So maybe our kids are 10 and we were going to save for another 8 years towards their education. We've got a plan to put this much away every month. If we die tomorrow, then that education plan is also disrupted. So when I'm planning with people with their insurance, we're looking at, if something happened tomorrow, what do we want to make sure is taken care of? The minimum is the final expenses. And then the bigger plan is making sure that our plan is where it wants to be. We want to set up our retirement goals. We want to take care of our spouses or our family members. Maybe we're caring for a parent. So there's all kinds of aspects that are considered. So the two types of insurance would be, the main ones would be your term life insurance and then your permanent insurance. Those are the two. And then when we're looking at permanent insurance, there's other options with those permanent insurance. So a PAR insurance policy would be participating life insurance. So companies like Canada Life and Manulife and RBC now, when you're paying for your permanent insurance, that money is going into a big pot. And that big pot is holding all of the premiums, but it's also using those to invest in the company. So for example, if they have lower payouts that year, then there's growth in that investment, and then the dividends are paid out to the policyholders. So the PAR, participating life insurance, means that the company is potentially going to pay you money back at the end of the year and put it back into your life insurance. So you have growth in there. You have a cash growth within that policy. So you've got your permanent insurance value, and then you've got a cash portion of it. Universal life is similar, except for you can pay extra into it, and that would go into an investment similar to an RRSP. So you have growth within that policy, a cash growth, that at the end of the day, either of those, when you pass away, whatever growth is in there is tax-free. So for example, if you have $10,000 investment or 20 or 30 right in that policy, if it's had growth of, let's say, 20%, when it pays out, it's coming to you or going to your beneficiary tax-free. So the different types of life insurance would be permanent insurance, where the needs don't go away, the term insurance, where you are taking care of specific time framed needs. And then within those permanents, you have options. You can just have a flat term to 100, which means you pay X amount of dollars. There's no cash growing in it. It's permanent. The PAR is participating in the company, so you can get paid back the dividends. And the universal is an investment portion. So it's a life insurance policy with an investment in it. And then the other thing to remember is at the end of the day, they're all tax-free. So when they pay out, they're liquid. They go to your beneficiaries right away, and nobody sees any tax implications from it. So any questions about those, or was I clear? Yeah, we're good. Michael, any questions? Peng?
No, not for me.
We're good? Peng, and then who else is in here? We have Iris iPhone.
Iris.
All right. Okay, so there are the other type of insurance that's available is creditor protection. So what I was talking about was insurance that you own personally. So this is a policy that you take out, it's in your name, you pay for it, and the benefit goes to your beneficiary. The other type of insurance that people put in place is that creditor protection. So sometimes you're a credit card company, or you're a mortgage holder, or you're auto loan company will sell you an add-on, which is basically a death benefit. So in the death benefit, I would say it's not a death benefit. It's a creditor protection. So you pay them X amount of dollars. If you pass away, it pays out the balance on your loan, and then whatever the item is will go to your beneficiary. So there's no cash that changes hands. It's just basically an insurance to pay off the balance on your loan. That's owned by the insurance company, or that's owned by the bank or the creditor. And so basically you pay the creditor to pay the creditor back, and there's no money that gets exchanged. It's just to secure the item and the payments that go with that item. The value in having personally owned insurance is that you own it. So you decide what you want to do with it. So for example, if it was for your mortgage, if you took out a separate life insurance policy to cover the balance on your mortgage, as your balance on your mortgage goes down, the value of your life insurance stays the same. So different than mortgage insurance, where as the value of your mortgage goes down, your premium you pay stays the same. But if you pass away, it's only paying the balance of your mortgage down. So it's a depreciating benefit. So with the private insurance, you're the boss, number stays the same, premiums stay the same. The need or the amount of insurance you have is really tailored to your overall needs. So it's not just taking into consideration your one debt, it's also taking into consideration your plan. So we have the term need is going to be your mortgage, but maybe it's also going to include, your line of credit. Maybe it's also going to ensure, education plans. It's going to consider everything. Again, you can name a beneficiary. So it's not the bank, it's going to be the number that is there is going to be left to the person that you decide to leave it to. And then they can decide. So if they want to pay out your whole mortgage, they can. If they just want to pay the max without penalty, they can. If they want to take that death benefit and throw it into an investment and then just take a regular draw to pay the mortgage, they can. So the options are there. It's very flexible, and there's no, obligation to just do one thing with it. And then it's underwritten. So when you take out a life insurance policy on this end, and Michael, you experienced with yours, that they didn't give you the insurance. If you get approved with personal insurance or private insurance, it's going to pay. They can't come back and say, well, maybe. No, it's going to pay. Once you're approved, if you pass away, it pays. With the creditor protection, they have that kind of caveat where at the end of the day, that's when they do the underwriting. So when you pass away, then they investigate and they say, well, there's a possibility that a pre-existing condition might have, so we're not going to pay. So it's kind of there. Oftentimes it does pay, but there's still that opening for them not to pay. So when you have private insurance, it will pay. If you're approved, it's going to pay. So those are kind of the values in having it owned by yourself, is that it's very, very solid insurance that you can count on at the end of the day to protect your family. Any questions about that? Nope, good. Okay. Ideal clients. So I talked a little bit about this already. Homeowners, so people who have debt. That's who should have insurance. So the idea is, and oftentimes when I meet with clients, I draw out a pyramid. And at the base of our pyramid are kind of protecting our financial pyramid from life's unplanned events, things that we don't want to happen, but sometimes they do. And that would be dying prematurely. That would be experiencing a disability. So impacting our income and our ability to earn an income. What does that look like? If I stopped being able to make money tomorrow, what would happen? How would my bills get paid? How would that affect my life? So I look at life insurance. I look at making sure that income is protected, and I make sure to look at critical illness if we experience a critical illness, because that sometimes can be worse than dying, because you can't work, you're sick, and you still got all your bills, and you have to figure out how to recover. So those are the types of insurances that we look at. But is that a puppy dog?
Oh, yeah.
Okay, there we go. Yeah, so usually I draw out this thing, but yeah, so we look at insurance. So if you're buying a house, you're working towards a plan, right? You're working towards building some equity, you're working towards all this great stuff. So you want to make sure that if you pass away, and let's say you're married and you have kids and you're the primary income earner, you want to make sure that the money is there to continue the plan for your family even though you're not there. So homeowners that are building and they have things to protect, they need insurance. Families need insurance. Business owners are another client of mine. So for example, if you have a couple people who are in partnership in a business, and let's say the business is doing all right, it's got some money in it, but that money's all tied up. And let's say that one of the partners passes away. So now you have to give that third share of the company either in shares to their family or buy them out. If you don't have the funds accessible, now you have to give the shares to the family, and now you have this person that maybe you don't like is coming into your business and has a share and a say. So having a life insurance policy on business owners is a good idea as well. That way, if one of them passes away, the money is there to buy out their shares from their family, and that way the company and the vision can continue to operate with the two main shareholders instead of the three. So there's a great placement for life insurance within businesses that have shared ownership. And then estate planning. So when you're looking at the end of the day and you've got, let's say, your house and your cottage, and you're the last one, the last survivor, when you pass away, there's tax implications to that. So say you want to leave the cottage to your kids, at the end of the day, there's going to be a huge tax bill for them. So are they going to be able to afford to keep the cottage if you leave it to them? So life insurance and considering those tax implications at death are an important part of the insurance planning as well. And again, at the end of the day, anybody who has something to protect should very much consider life insurance. And of course, the best time to buy it is today, when you're well and you're healthy. And even if you're not, again, the value in being a broker is I have a company that can help. So I've talked a lot about the different ways that I kind of assess or help clients kind of understand where the need is. A lot of times they know it, sometimes they don't, sometimes they're not thinking about it. Oftentimes we're just running the rat race. We're just trying to work and make money and pay the bills and, get on to the next thing. And we're not thinking about all of the background stuff. So my role as an advisor is to help people sit down, understand where the kind of gaps are, give you the opportunity to make the decision whether or not you want to protect it or whether or not you're good self-insured. But it's a process, and it's an important process that I go through with each one of my clients. So what it looks like is I do a complete needs assessment. So I learn about the clients, who they are, what do they hold dear, what's important to them, what are their goals, when do they want to retire, they got travel plans, kids, education plans. We'll look at their financial kind of house. What are they earning, what's coming in, what's going out. Something happens tomorrow, what's the backup plan? Is there a backup plan? If there is, fantastic. Sometimes determining whether or not there's a backup plan looks like investigating their group benefits. So oftentimes I go with clients and I look at their group benefits. I help them do the calculations for, if they ended up on a disability, how long would it take for them to get their first paycheck? What does that paycheck number look like? Is that enough money to pay the bills? So I do break down people's group plans with them as well. And that's all part of kind of my goal of not over-insuring people. I'm not here to just sell you everything because I got everything. I'm here to help you understand what you have. Is it enough? And if it's not, what does it look like to put something in place? So that's how I operate. It's good business. I'm grateful that I'm able to be reactive in my business now. I don't have to go search for people. I have a lot of referrals coming in, and I believe that's because I do what's best for the client, and I take pride in that. I do a little education session with them, help them understand the different types of insurance, which I kind of touch base on with you guys, the critical illness insurance, life insurance, and disability. I look at their health, ask questions. When's the last time you went to the doctor? Do you have any outstanding tests? Do you have a history of cancer, diabetes, heart attack, stroke? I get a general outline of what their health looks like so that I know which company to place the business. Because the last thing I want to do is not ask those questions, go through the application, submit the business, and then have them come back and send a letter to the client to say, no, we're not going to insure you. because of my experience with all of the companies, I know who's going to take to what. And so having that experience, I'm able to make the process with the client easier. I want it to be easy for you. I want it to be easy for me. I want to make sure that we're not putting ourselves in situations that's going to delay a process or come back with, you know, results that are unfavorable. We want to make sure that, you know, we're doing the best for you and not taking a lot of your time. I hope that today is the most time I will take from you. And then, you know, at the end of the day, once we've gone through everything, if they see a need, you know, that means that there is one. So then we go forward and we start building solutions, and solutions look like me going on the back end of things, doing the research with the different companies and finding the best ones for us to apply to, based on coverage, based on, you know, reputation, based on premium. You know, at the end of the day, we all want to save money. So I want to make sure you're getting the best coverage for the best price with the best company. So that's the needs assessment. So that's super important. And, you know, these are the things, again, which I touched base on already. Being a broker, I'm super, super pleased with the decision that I made to go through the process in the way that I did. So I started with a big bank. I was a captive agent for 2.5 years. And then I went and I worked, you know, managing a brokerage for a year. And now I'm on my own and I'm loving it. So I'm not tied to one insurer. I have access to pretty much anyone I want. I have really strong relationships with all of my regional directors for each of the insurance companies. So, you know, I get a call at 8 o'clock at night. I can call my RVP for any of the companies at 8 o'clock at the night, and they pick up the phone because we have strong relationships. So that's a value to me, that's a value to you, and that's a value to the clients, that we can always get, you know, if we have a question, we can get the information we're looking for. Very personalized service. You know, it's not I'm not a call center. I'm not stuck in a bank. I am able to really interact with the client and give them what they need. And again, readily available. I'm available. Constantly educating myself, and I'm very proud of my business and very pleased to be in the business that I am. So I love insurance. And you can ask Kelly. I like to call myself an insurance nerd. So that's why broker's best. And then at the end of the day, applications are easy. So do them in person or over the phone. Basic requirements, you know, if you're perfectly healthy and, you know, under the age of 49 and, you know, you don't have any tests coming up, I can get insured with most companies in a very short period of time. With all I need is, you know, your name, date of birth, age, address, income, and social insurance number. Possible requirements is if there are tests coming up, or if you're over the age, or if you have pre-existing, there might be a phone interview, which they do health and lifestyle questions. So they ask you, you know, what are your habits? You know, what is your health history? If there's further, another possible requirement might be a nurse will come to visit and take blood, urine, vitals, so height, weight, and then that might be one. And then lastly, another requirement might be an attending physician statement. So maybe you had something happen in the past and you fully recovered from it. The insurance company might want to see in writing from your doctor that that did happen and that you were fully recovered. In most cases, you can get temporary insurance, which means once we go through the application process, you will be insured for the amount applied for, right up until the day that the insurance company either says yes or no. So it's nice because you can always get coverage. You'll always be covered. And then if the insurance company says yes, great, you start from there. If the insurance company says no, then obviously your temporary insurance ends at that point. And the only thing that you need to do is say no to 2 questions to get the temporary insurance, and that's that you don't have any critical illness and that you haven't been hospitalized for a period of time in the last, I think, 60 days. So applications are easy. I make it easy. Yeah, does anybody have any questions? I know that Michael's having a nap, and it's okay. I'd be sleeping too, Michael. It's all good. And so, yeah, does anybody have any questions? Ping. Oh, Michael, I can't hear you. You're muted.
Yeah, I
There you go.
apologize, but I was licensed at one time.
Yeah, so that's all right. That's all good. No, don't worry about it. I'm telling you, I'd be sleeping too. But I've been told my voice is like nails on a chalkboard, so I'm pretty impressed that you can sleep. Anyway, so that's good. So Michael's good. Anyways, that's it. So I just wanted to go through from beginning to end kind of what types of insurances are available in the life insurance spectrum, kind of what are the areas that I can be of assistance, as well as what the advantages of working with a broker are. So yeah, anybody got any questions?
I've always advised my clients never to get mortgage insurance
Yeah,
because of that option. They may not pay at the end.
yeah,
So I've always pushed them to a buddy who sold term life to them.
yeah,
And
sure.
I stopped doing that a few years ago just because he went back to Cape Breton.
yeah.
But that's always been my plan. Do you think there's a better philosophy, or should I
No,
just?
I think that's a good, I think it's, the thing is I don't like to ever put somebody in a situation of risk, right? So if they're not speaking to an advisor at the moment and they're taking on a huge mortgage, I would not advise them against taking the mortgage insurance. So if you can catch them before they sign in the dotted line and send them my way, absolutely 100%. But I would never advise someone not to do it, because if they didn't do it and they didn't get an appointment to see me for a month and they died in the middle of that, then they've got a risk situation happening. So something is always better than nothing, right? So I 100% agree any day of the week that having private insurance is way better than mortgage insurance, way better. However, something is better than nothing,
Yes.
right? And you don't want to be that guy that says don't get mortgage insurance and then they don't get any insurance and then they die, right?
I always called my buddy while we were sitting together and lined
Well,
it
that's
up.
what it is. Yeah. I want to be your buddy, Michael. Can I be
You
your
know,
buddy?
when I sold, the thing that always stuck in my head was that my boss always said, it's better to have it and not need it than to need it and not have it.
Oh, absolutely.
Yeah.
There's nothing worse. There's nothing worse. And there's nothing more disheartening than somebody, coming and saying that they, that they found out they're sick and they get insurance. It's like, no, I'm sorry. Like I've so that's, that's the mission. Education is the mission. People need to understand that, the best time to get insurance is yesterday. Right? So absolutely. So yes, any day of the week, but again, something is better than nothing. So I do write a lot of term insurance for mortgage protection all the time. Nice thing about those term insurance policies is they're all convertible. So it means that you can have that term insurance and get secured based on your health today, and 20 years down the line, you can turn that into permanent insurance and not have to go through any medical underwriting. So, start with a term policy. Usually I start people with shorter term policies, even though their need is longer, because we can always make the changes as we go. So especially for new homeowners that have, they're big expenses, new expenses, we can put a term, like a 10-year term policy for them in place, which keeps the premiums really low. But a lot of these companies now, within the first 5 years, you can extend the term another 20 years. So at the end of the day, you can get the full 25 years, start with 10 before the end of the first 5 years, then you can extend it to another 20 years. And you can do that without going through the medicals again. So it's a cool way to position it to be able to keep the costs really affordable for the client, but ensure that they're covered for the full term. Yeah, so lots of fun stuff. Hopefully I didn't talk too much.
No, it was perfect.
Did anybody have any other questions?
I'm good. Peng messaged in the chat that he's good.
He's good. And Iris iPhone. That's a nice name. Yeah, so that's all she wrote. I really appreciate you guys taking the time to listen to me. I hope that gave you some info.
Yeah, that's awesome.
And again, I'm available. So if you ever come across, questions, need any information, you got clients that you want to send over my way, I'm happy to take care of them for you. Service is big for me. So I value my clients and my reputation, and it's important to me to retire in this business. So a lot of my business comes from realtors, as well as home and auto insurance advisors. Yeah, I got a lot of people in my back pocket too. So I work very closely with property lawyers and family law lawyers and debt consultants and all kinds of things. So it's fun because I also am a resource for other options as well. So that's me.